Today we are going to talk about the concepts of provisions. Provision is a subset of liabilities. So in order to understand provisions, let's go back to the basics and think about the definition of a liability. It's a present obligation, meaning as at reporting date, this obligation exists. It has to exist as a result of a past event, and there will be an outflow of economic benefits. But how is this different to a provision? If we have a liability, but we're not exactly sure about the timing of when it has to be paid, or we're not exactly sure about the amount, then we get ourselves a provision. For example, a business knows that there'll be some warranty claims, but they don't know exactly the amount. But based on past experience, it's been roughly $3,000 a month consistently for the past few years. Another example are long service leave entitlements. This is specifically for Australia and New Zealand, where employees are entitled to additional vacation after an extended period of service with an employer. We have to be careful not to confuse this with actual liabilities and also contingent liabilities. If there are significant levels of certainty, where we know the timing and the amount to be paid, it will be classified as liability. If there is too much uncertainty, it will be classified as a contingent liability. I have a video about contingent liability, so if you're unsure about what it is, you can go check it out. So provisions is basically in the middle of the two, where the timing or the amount of when the obligation is to be paid is uncertain. So IAS 37 has given us rules as to when to recognize a provision. It's when we have a present obligation, it's probable, and there's a reliable estimate. So it doesn't have to be exactly measured, but there has to be something to back up the calculation. For instance, as I said earlier, a business can base the calculations on past experience. Now we'll have a look at a simple example and a flowchart that will guide us through whether or not a provision should be recognized. ABC Limited sells electronics and received multiple complaints regarding their product causing explosions, and 3 consumers had to be hospitalized. Management of ABC made a public announcement that the company will cover the hospital bills. This was estimated to be $70,000. Firstly, there are 3 factors to determine. If the case meets all 3 criteria, we have ourselves a provision. So we'll look at these one by one. The first one is, do we have a present obligation as a result of a past event? Not a possible or future obligation, a present obligation. Legally, we don't have a binding contract, and we probably don't have a statutory requirement mentioned in the case facts. However, it's likely that we have a constructive obligation. Has there been a valid expectation created? Well, the management of ABC Limited has publicly announced that they'll be paying the hospital bills. So yeah, I would say that there's a valid expectation. The next factor to consider is there a probable flow of economic benefits? Is it more likely than less likely that the $70,000 will be paid out? I'm going to say yes. Management has publicly announced to pay the hospital bills and consumers are genuinely injured. Do we have a reliable estimate? So again, the answer is yes. In this case, the estimated amount is a lump sum of $70,000. In some cases, there may be multiple claims. For instance, if there are 100 warranty claims and an entity doesn't think that all claims are going to be paid out, they might calculate the obligation by weighing all possible outcomes by their probabilities. Back to the case scenario, because all 3 criteria are met, a provision for $70,000 should be recognized at year end. The last thing I want to touch on is the discounting on liabilities. Provisions are measured at discounted present value using a pre-tax discount rate because it should reflect the current market assessment of the time value of money. So if we have a future liability that has to be paid, we have to discount it back to today's value. I hope you now understand the basic concepts of provisions.